A lot of people talk about this idea behind generational wealth, and they think that means starting a business. It doesn't. Everybody's not going to be great at business, but everybody can leave wealth through life insurance.
When it comes to building wealth through life insurance, I like to refer to the 3 S's that are going to make this very crucial for you. First one is making sure that you have the right strategy when you're looking at your life insurance, that you have the right structure, and that you're finding something that's sustainable. Let's talk about the basics of life insurance. Let's break it down.
It has to work or it has to work.
Welcome to Circle of Greatness. I'm your host, Nehemiah Davis, and I'm really excited about today's episode because we're going to talk about there's 2 things that is guaranteed in life: the day that you're born and the day that you die. And most people do not. They prepare for the day that you're born, but they don't prepare for the day that you die. Yep. So I got a super special guest, my friend, my sister, Siedah Garrett guest, who's about to come break down the life insurance game and how we can protect ourselves and our family. Now, I truly believe this is by far going to be some of the most important information you hear, and you do not want to miss 1 minute of it. Siedah, what up?
What's going on?
How you feeling?
I'm doing great.
Happy to have you on the show.
I'm glad to be here. I made it.
Yeah, hey, yes you did. I made it. No, I don't know if that's a song, but anyway. Yeah. So for you, I really want to talk, life insurance to me is complicated. Mm-hmm. Like I hear about IUL, I hear about cash value. I'm like, which one do I need, right? So I want to really go ahead and break down the different insurances today. I want to break down, I hear you talk about power of attorneys. I hear you talk about trust. It just seems, it's a lot.
Yeah.
So I'm trying to get educated so I could better protect my family, right? Mm-hmm. And leave something, right? Because a lot of people talk about this idea behind generational wealth, and they think that means starting a business. And to me, I'm like, it doesn't. Everybody's not a business owner. Everybody's not going to be great at business, but everybody can leave wealth through life insurance. And I don't know why more people don't do it. Mm-hmm. I honestly, being honest, I just learned about life insurance. I just protected myself properly less than 5 years ago, I want to say. So I'm 37. Like, why wasn't this, I feel like it just doesn't matter to people. So I'm trying to help people understand why they need it, why this is important. And so I'm happy to have you on here.
Yeah, I'm glad to be here. I mean, you started off with a whole lot. You came out the gate swinging, but I think this is such a pressing topic because it seems like everybody is talking about life insurance right now, but to be honest, life insurance has been around for hundreds of years. Yeah. The 1%, the wealthy, have been using these strategies and tools for hundreds of years, but what's happening now is that they're just now making these products available to middle-class individuals, so we're just starting to hear about them. We're just starting to learn about them, I would say probably over the past 15, 20 years. And so now that more people are getting knowledge, which I'm so glad that they are, and they're learning more, they're starting to say, okay, how do I do this? How do I protect my family? And so let's go back a little bit to just talk about the basics, like what is life insurance?
And let me ask you this, how did you even get in it? Like before we go even get in the debate, what made you say I'm about to start? Because you're an entrepreneur now. You said you wasn't an entrepreneur.
No,
so I was not. How did you get in the idea of life insurance? Who introduced you to it?
Yeah. So I was always the person, go to school, get a good job, work really hard.
Yeah. Who told you that? Your mom and dad?
My mom, my dad, and honestly, coming from where I come from, like that was the way out. Yeah. It was either you were going to go to the streets or you were going to go to education. And so for me, I'm just so grateful to God that education was my way out. And I know there are a lot of people out there right now that are thinking you have to be an entrepreneur to be successful. You have to be a business owner. But I want to say to you directly, I had none of those desires, and I was very successful in corporate America. And so I did all of those things. I attended Hampton University, went on to become a business strategy consultant for a top Fortune 100 firm, helping CEOs and executives get to where they are, right? How to plan their business. So that's where I started my career. I never had a desire to be an entrepreneur, and certainly not in finance. I actually got introduced into finance because I was shamed into it. You know, when you walk into that room and they give you all of your benefits from HR, you get your 401k, you get your life insurance, your health insurance. They gave me an Amex card with no limit. I was terrified of that. Like, I was like, oh no, I don't want that. Take that back. How does this work? But it wasn't until that moment that they started asking me the deeper questions. What investments do you want? What type of life insurance? What percentage do you want in your employee stock purchase plan? That I was like, I never heard this information before. And I was only 21 at the time. So I'm thinking to myself, I'm just starting. So what else is there about money that I don't know? And it seemed like all of my counterparts, they had their head down. It was like a test. Like they knew what to put down. I had no clue. And so that's when I said, I need to start learning more about that. So I hired my first financial advisor. And she started teaching me about the basic, simple things that somebody who I consider myself very intelligent, very smart, 2 degrees, that I never knew any of this. And so I said, if I don't know this information, I'm pretty sure that there are so many other people who have never heard about this. They think they're doing the right thing, but we're missing some very basic steps. And so for me, like that was my introduction into getting in there. So when I started learning about it, started teaching people was like, oh, show me what you're doing because it's working for you. And I'm like, I mean, you got to go hire a financial advisor and figure it out. Like, that's what I did. Yeah. But I realized that there was a disconnect between the people that look like me and the people that I was serving every day on my job. So the people who look like me, they wanted to learn more. They wanted to truly get into wealth building, but they didn't feel comfortable learning from individuals who were teaching this information. So I decided to infiltrate the industry. That's what I call it. Get my license and start building a business and a practice. And I built my business 4 years part-time while still working in corporate America. And then it wasn't until I had 2 defining moments in corporate that I said, let me shift. The first one was I realized that the more money they pay you, the more time they want.
Wow.
And my daughter at the time was 2. So I wanted more time. And I also realized that I could not control how much money I made there. And so when you're the person in your family that everybody depends on financially, if somebody gets in a jam, I can't go to my job and say, I need an extra $5,000 to help my mom or to help my sister. That was only going to happen by my own merit. So that's what caused me to really shift and pivot into entrepreneurship, but that was never the goal.
I hear all that, like how you did this in the like how did you start this business? Right now you got this business. I mean, you helping people retire right now. You helping people, we talk about it right now, people naked out here. You helping people get clothing on, right? If anybody listening, what I'm saying is her company, right? In the show notes, you guys will have a description to book a call with her. She's helping everyday people who are naked, meaning no insurance. Be okay. I was naked, get insured. You're about to retire. You don't know really what you're going to do. She's going to help you with retirement, right? So definitely get with her firm. But I want to know with you, like how did you, I heard the professional route, but what made you say, I'm building my own wealth firm, right? You could just continue that, a JP Morgan and Chase, a Schwab, all these big companies, but what made you say, I got to take this in my own hand and start my own firm?
Yeah. So the financial services industry is a very, what we call male, pale, and stale industry. And so they overlook the everyday person. But what I was seeing working with clients is that our communities have money. The African-American community has a $1.7 trillion spend. That would make us the 7th largest economy in the world. And so we have money, but there was a disconnect. And the routes that financial firms were taking was not reaching that people because they would set certain limits where they say, in order to work with us, you need to have $5 million in liquid assets. Well, most of us, either we have a lot of money, but we don't have a lot of assets, or we're building our assets in the wrong place that doesn't allow us to qualify to sit with some of the top individuals. So you have these people who can educate us, who can actually share this knowledge and information, but they're not including us in that count. And so I said, I need to do something different. And the only way that you're going to make an impact is if you have ownership of it and if you do it yourself. So I wanted to be able to talk to my people and reach them in a way. And so I firmly believe that there's nobody who does what we do, how we do it, and who we do it for when it comes to educating people about money, wealth, insurance, retirement, so forth.
How difficult though is it to educate us? Like, because it's already foreign, like from the moment that you talk to them, how long does it really take somebody to, I heard about life insurance for a long time, but it took me 10 to 15 years to get me some. So like how are you accelerating the education process? I know you got a community, but how are you accelerating the education process when you're talking to somebody for them to really understand? I believe this is so important, but it wasn't pitched to me as that important. So I didn't really care. Like as I got older and started getting more assets, I'm like, oh crap, let me try to get some things in order.
So when it comes to money, there's a part called emotional money. And so I teach a class about that. And so it's not that we don't have money. It's about how we feel about the money, what we believe about the money to be true. And so you have to be willing to go there with your clients and put it in terms that are relatable to them. And so I always share all of my financial mistakes with my clients. I expose myself first to make them comfortable to say, "Ooh, that's me. Girl, I was just like that." I always tell about the fact that I didn't know what to put on my 401k, because I know there are so many people right now that are working that have retirement plans. They're scared to invest in them. They never looked at them. They never changed them. And they don't know what they put down there. So I share my embarrassment first to allow people to drop their wall to say, you know what, that's me too. How can I also do this? And so I always say, I know what it feels like to be on the other side of the table, but I want to show you what I did to get on this side, what it needs to make it happen to do that. So that's something that is very unique to what it is we do. And most people aren't willing to go that extra mile. But when I'm working with my clients, I'm looking at it like, this is my mom, this is my aunt, this is my dad, this is my uncle. So I just have a passion about it because I've seen so many people in my own family, in my own community work for their entire lives. I'm talking about good jobs, nurses, administrators, paralegals, you name it, educators, and then they end up with nothing to show for it. And for me, I'm like, we have to break this cycle, because with all of this hard work that we're doing, we should be kings and queens in this country. But everybody taught us how to work hard. Nobody taught us how to build. And that's really what our passion is. How do we help you build, sustain, and transfer wealth?
Build, sustain, and transfer wealth. Let's talk about the different forms of life insurance. Like, I want to talk about retirement.
Yeah.
Like, so many people like, oh, I was at this job, I still got money over there. I want to talk about retirement, because a lot of people are now about to retire with no plan.
Yeah.
They don't have a clue what they're going to do. And most of them may be back at working another job. So I want to talk about retirement. I just always hear how people always unprepared for retirement.
Yeah.
Then I want to talk about what are my steps when I have no insurance. And then, is there a middle ground? I got insurance, but do I got the right insurance? Do I need to become my own bank, cash value? Because there's so many things swirling around on the internet. I'm like, man, what is the way to really do this stuff?
All right, so let's break it down. So when it comes to building wealth through life insurance, I like to refer to the 3 S's that are going to make this very crucial for you. So the first one is making sure that you have the right strategy when you're looking at your life insurance, that you have the right structure, and that you're finding something that's sustainable. So when we're talking about strategy when it comes to life insurance, there's different types of life insurance that serve different purposes. So there's 2 or 3 main strategies that you're looking at when you're looking at life insurance. The first strategy is just being able to protect your family temporarily. God forbid you pass away too soon, get sick, there's money to protect your family. The second strategy is a wealth building and capital building strategy, where you're putting money into cash value or permanent policies over a period of time to build wealth in its longevity. And then there's a wealth preservation and capital preservation strategy, where you have a lump sum of money, you're trying to preserve it. Maybe you want to use that to do some different investments because it's not earning enough money in the bank. So you really have to understand what is your strategy. And this goes back.
Because everybody's strategy is different.
Everybody's strategy is different, because your goals and dreams are different than my goals and dreams. How you drive is different than how I drive.
That's a fact, Jack.
So
how I travel is different. We went out of the country, y'all, and we were going to Mexico. On Siedah is actually really my sister. Like, her husband is like my best friend, right? And so we going out the country or whatever, and she add more insurance. Like, I gotta go add me a couple more. Tell me, like,
I did that.
What happened though? You had a thought? Like, what happened? Were you?
So we were heading out of the country, and I don't know. Like, if you're a parent, you know how you get that feeling, like when you're away from your kids. Like, what if something happens, right? And there's so much that's going on in the world, and so I'm like, okay, I'm getting ready to spend, however many thousands of dollars we spent on that trip to go, but to get a few extra $1 million of life insurance cost me less than $200 to be able to do that. And I was able to get that coverage in less than 15 minutes. And so I'm like, before I go travel and do those things, God forbid something were to happen, I want to make sure that my family was set up just extra. And so I'm always about having a reward and punishment system. If I'm going to reward myself, I want to make sure that I'm doing something to earn it. So for me, it was like, okay, we're getting ready to travel, but let me be first partaker, first doer. Let me go add more to my wealth portfolio that I have. So back to the 3 S's, your strategy is important. Like, you got to figure it out. The second thing is the structure, how your policies are structured. not all life insurance is created equal. Not all life insurance companies are created equal. And certainly not all agents or advisors are created equal. So you have to make sure that you have the right structure set up, because if you're not structured correctly, you could be thinking that you're doing one thing or that your policy is going to do one thing for you, and it doesn't do that at all. Yeah. And I firmly believe that when things aren't structured correctly, especially in our community or with people who aren't used to dealing with money, we're looking for an excuse as to why it didn't work. And so I take my time when we're working with our clients to really understand what the structure is that is set up right, because I like to go to sleep good every single night. I always say that, like, I want to sleep on my pillow good every single night. So what your goal is, that's what we're going to structure it to do. And the third one is sustainability. It has to be something that lasts. People say, Siedah, what's the best life insurance? The life insurance that works when you need it. It doesn't make sense to start something that you eventually have to stop. Wow. Life insurance is not a short-term, get-rich-quick thing. It is a wealth-building strategy, a wealth preservation strategy, so it's over the long term. You need to make sure that whatever you're doing, it lasts you over a period of time so it can be there when you need it.
That's good. Break down the difference between whole life, IUL. Like, it's just so many of them. Okay. I hear IUL is not good, then I hear it's good. Like, everybody tells me, I'm like, bro, which is what? But again, I guess it's dependent upon your personal situation. But what is the basic life insurance that every individual should? Let me ask you a question though. They make health insurance mandatory.
Yeah.
Why don't they make life insurance mandatory? I don't get it. You get like health insurance. I think if I don't pay it, I'm gonna be taxed more or something. But why ain't life insurance should be mandatory? Because I guess they don't want you to, I don't know.
Well, when you look at the insurance industry, period, the insurance industry is one of the wealthiest industries in the world, because we're paying money for life insurance, health insurance, car insurance, cell phone insurance, pet insurance. We got insurance on almost everything. And so you're paying those premiums into that company, but how often do those companies pay out? Like, you may be paying into health insurance every single month, but you may not use it. Like, I know for me, I've been driving since I was 16. You know, knock on wood, somewhere around here, but I've never had to use my car insurance, but those premiums get paid in.
And so, it's safe to say you at least pay $1,000 to $2,000 annually for insurance, for car insurance.
Correct.
And that's 15 years of paying that at least.
And so insurance companies have tons of money. And this is why wealthy people love to invest with them, because they don't need more money. They don't need to be risky with their money. They want to be able to do calculated strategies, and you can get more out of it when it comes to that. So let's talk about the basics of life insurance. Let's break it down. There's two types. You have temporary life insurance and you have permanent life insurance. Temporary life insurance is like renting. You don't own it, but you're going to rent it for a period of time, 10, 15, 20, 25, 30 years. Yeah. You got to look at it at this way. It covers the job that it needs to do while you need it. It's the most affordable. I like to call it the Wendy's 4 for $4. You could get a whole lot for a little. That's term life insurance.
When you went on the trip, that was term.
That was term life insurance.
Just to give me something extra while I'm out here.
Give me something extra, right? I can get a whole lot of coverage for a little bit of money. It can last me 30 years. By that time, my kids be in their 40s, you know? Yeah. So if something were to happen to me prematurely, they would have that money. But also they have term and life insurance with living benefits, which also means that if I get any major critical, chronic, or terminal illness, I now have access to millions of dollars that I can use, that when I go to a hospital, why health insurance is mandatory is because that's how they get paid, right? When I go to the hospital, if something happens, I want to be able to say, the first thing they ask you for is, do you have money? And how they ask that is like, where's your insurance card? Right. They want to know how you paying for this.
I was there the other day. They wasn't trying to serve me and my wife, tell where that, and we didn't have it. They had to pull the numbers up. They said, all right, you good.
Do you have
we'll take you to the back.
And so when you start to look at how far medicine has advanced, if you want the best of the best, they don't take insurance. They want cash. If you want to go to Cancer Center of America or some of the other places, they want cash. So being able to have a term life insurance policy with living benefits.
What you mean they want cash?
They don't take insurance. They want you. It has to be paid out of pocket.
So when I go to certain places and get certain treatments, it's like IV therapy. You're not paying for that with insurance.
You're not paying for that with insurance.
I was going to go get this full body scan cash. Like,
correct. And so there's different treatments. Like I went to a conference one time and I didn't realize this, but there's a pill that you can take if you were to have cancer where you don't have to lose your hair. It doesn't have to fall out. They don't take insurance. They want cash. So when you have a term life insurance policy or any life insurance policy that has living benefits, you can say, give me the best.
Tell me about living benefits, because I hear that. So you got life insurance. Is this still temporary?
This is still temporary.
With living benefits.
With living benefits.
Break that down.
So that means if you come across any major critical, chronic, or terminal illness, you can access that death benefit for that policy while you are still alive to cover those needs. So what I'm saying is, let's say somebody
If you're talking to the wrong agent, they not even giving you that.
Not all, like I said, not all products are created equal. You got to make sure you're doing the right thing, and they're asking you, do you want the old term or the new term?
Do y'all do an audit? Like, can you audit my? As I was thinking, I'm like, yo, can you? I want to go see if I could pull my stuff up, audit it right now. Maybe not right now, because if it ain't right, I'm gonna have to come see somebody. So I know, but do you audit people's stuff just to see if they're in the right vehicles and stuff? Y'all do that too?
We do. We audit people's policies, and this is what I always say. I don't know what the conversation was when you set this up, or where your education level was when you set this up.
It wasn't there.
Right. But now that you've learned new information, it's okay to say, okay, I need to adjust. And one thing I want us to understand when it comes to life insurance, retirement, wealth building, period, is that it's not a set it and forget it plan. It's not something that you do, don't think about it, and never look back at it. That's what our grandparents did. You say, do I got insurance? Yeah, I got insurance. I got insurance. My great grandfather, I always talk about him. He got insurance in his 20s. He lived at age 101 years old. He always said he had insurance. Y'all, how much I think that life insurance policy was worth?
I don't know.
$1,000 when he passed away. Why? Because in 1940, $1,000 was a lot of money. But you fast forward 80 years later, it doesn't do the same. So if you set something up and you never go back to adjust it, you never look at it, that's how we end up, Grandma only had $5,000 worth of coverage. She only had $2,000 because we never went back to adjust it. So you're constantly reevaluating where you are. Yeah.
Hey guys, if you're looking at this episode, I got to stop it right now. What I want you to do right now, go to wealthmultiplierclass.com right now. If you're like me, you're still trying to figure these things out. You're listening to this episode, but you're like, yo, I need more, right? So I want you to go ahead and join the class so you can learn more. If you're really like me, you like, forget the class, Neil. I need to just be inside of Siedah's community where I can learn this type of information as often as possible. Go to wealthmultipliercommunity.com where you get to be around everyday individuals like you on the path to building wealth and building it right? So I want you to stop and do that. And the final thing, in the show notes below, you're going to see a description where you could book a call with Siedah and her team where they can do audits. They can help you figure out retirement. They can help you get clothed, right, if you're naked, right, and help you get to that next level. So make sure you guys get to that. We'll see you. Let's get back in the episode. So let me ask you this. So what conversations should we start having in our households? Because I don't know about my mom's insurance. I don't know about none of that. I just know what I got going on in my immediate house. But somebody told me I need to put insurance on my mom. Who do I need to put insurance on?
So you should have insurance on your stay-at-home spouse, because stay-at-home parents or spouses, their value to the household is $400,000 a year. So if something happens to your wife, who's going to cook? Who's going to clean? Who's going to take care of the kids? Who's going to make sure everything is right for you?
It's over with for me.
And then
I ain't going to lie to you. I was thinking the other day, I swear, just a day ago, I'm like, what would I do without my wife? Like, I'm talking about taking care of all the,
that allows you to go out and do what you do. And so you need to have that insured, because I don't know about you, but I'm not going to be okay. And a lot of times, because we don't have insurance on the people that matter to us, your job or maybe your business, however it's set up, but I know for your job, they give you 2 weeks to grieve? I don't know, but if I lose my spouse, I need more than 2 weeks. True. And this is why you have so many people going to work not in the right mindset, sick, so forth, because they don't have the capacity financially to say, let me put this on hold.
So that's what life insurance, the living benefits would do? Like, yo, I got to take off for 4 months to get right.
Correct.
I call somebody with, what happens?
So
somebody just died, boom. I got the insurance on them or XYZ. I got living benefits. Who am I calling?
Right. So you'll call the life insurance company and they'll provide all those benefits for you. Or you can also call your agent, whoever is helping you set up that policy. They should be able to explain to you what that person had, what that means for you. But that gives you the breathing room to say, you know what? I hear you, but I need some time. But now I have millions of dollars that my lifestyle is not going to change. Most people aren't in that position. When somebody passes away, they are in stress. They are in turmoil. They are, fighting and torn apart. They're begging for money on GoFundMe's. They don't really have the mental capacity to say, you know what, let me just take some time and regroup myself. So now when they're back in the workplace, now when they're back in the business, they're not performing how they need to perform. So life insurance makes all of that right. It indemnifies you in that way. So your parents, if you have older parents, if you have spouses, if you have children, you can get your child life insurance as early as 15 days old.
Wow.
They're never going to get it cheaper or more affordable than that period of time ever.
So what insurance am I getting on my new baby when they born?
Right. So once they're 15 days old and they have a social security number, you can get a permanent life insurance policy on them. I call that planning for one generation and getting the second generation free.
Tell me about that.
Meaning, so you get a permanent life insurance policy, and we didn't get into this, but permanent life insurance policies, there's two types. That permanent life insurance policy is an asset. Assets appreciate. So the same way if you own a home, it appreciates in value. Your permanent life insurance policies, they appreciate in cash value. So that stays with them throughout their lifetime. And as that cash value appreciates, they can use that money for college. They can use it for a business, buy a home. You could use it for emergency funds, buy their first car, whatever the case may be. But that death benefit that's on that policy, that's for their children. So my wealthy clients, as soon as they have a grandbaby, they're getting $1 million, multi-million-dollar permanent life insurance policy, because they're not just thinking one generation.
Wow.
They're thinking this is the cheapest I can get this ever on this child while they're the healthiest, no issues or concerns. They're going to have this appreciating asset, this cash value, but then their children are going to be the recipients of that death benefit. So I'm planning for one generation, but I'm getting the second generation free.
Because it's permanent. Once I get it on them, it's forever.
It's forever.
How much does this normally cost?
So it varies. So the cost of insurance is based on your age, your health, your risk factors. That's one thing. But because it's a permanent policy, it's an asset, you can put more into the policy, which we call overfunding, that helps grow that cash value a little bit more. So if you are, and this goes down to the difference between whole life and universal life. A whole life policy is the OG of life insurance. That's what I like to call it. Most of our grandparents probably had that. It's the original gangster, the original life insurance policy. But it's a very fixed policy. So it means that it doesn't allow you to make changes to it. So once you set it up, the death benefit stays the same. How much you put in stays the same. The interest that they're going to give you is going to stay the same throughout the duration of the policy. You can't make changes to it. A universal policy gives you flexibility. It gives you options. So it gives you the flexibility in, do you want death benefit only, or do you want death benefit plus cash value? It gives you the option in how much you pay. It's we call a flexible premium. So they're going to give you a funding range. What's the minimum you can put in? What's the max you can put in? You get to decide. So when life is good, you can load that policy up, get more cash value, get more growth on your money. But if life changes the other way, you can pull back a little bit. So depending, again, back to strategy, where that person is, strategy and sustainability, whole life may be good if you know you can commit to that for the rest of your life and never make changes to it. But if you're a person that's still growing or building, you may need universal because you may need that flexibility.
Is that IUL? Okay.
So
is that what universal is?
So universal life, now the other part about universal life is that it gives you flexibility in how you want your money to grow. Whole life, your money grows fixed. So that means when you buy that asset, when you buy that policy, you're buying it at the interest rate that's the time in the current market. So let's say I lock in at 4%, it's 4% for the duration of the policy for the rest of my life. Universal life gives you a choice in how you want your money to grow. It can grow fixed if you like that. So you can lock in a fixed rate every single year. It can grow variable where you can actually have that money invested in the stock market. You can make 100%, you can lose 100%, or it can grow index. And index is what we hear is index universal life, where you cannot lose money, but it is tied to market link gains. Like if the S&P goes up or the stock market goes up, you can make more money. So that's a choice that you have to make. But when you're sitting down with an advisor or an agent, that's what they're explaining to you. It's not a one size fits all. I have term, I have whole life, and I have universal life. But I didn't get all of them at the same time. I started them as my strategy grew, as my wealth grew. I used them for different reasons and different purposes.
That's good.
Yeah.
Wow. It's a lot.
It's a lot. But here's what makes it simple. Nothing in your life you have ever done successfully have you ever done it without a plan.
True.
And most people are trying to build wealth without a plan. They don't know where they're truly trying to get to in life. They're doing their finances in silos. Real estate, retirement, insurance, but they're not putting together holistically. So what makes our firm different, we're a holistic planning wealth management firm. I'm saying, okay, Neo, what is your end goal? Where do you want to be at in the next 1 to 3 years? Where do you want to be at in the next 3 to 7 years, the next 10 plus years?
Can I tell you this, what I want to do? Just
yes,
so
go
you
ahead.
know, because you may help me with a plan.
Yeah.
So I got this plan. We got 5 children now.
Okay.
I need to do all this insurance stuff on my kids properly. And I shouldn't be sharing this because I feel like if something happened to me, they get a nice amount of money. Like those things are in order. But I'm happy I'm kind of sharing it because it lets y'all know my stuff ain't all the way right. Like I ain't trying to act like what they say, holier than thou or whatever. I need to get my stuff all the way dialed in with my children. I don't on my mom, key man insurance. So.
But let me say this while you're going. This is important because this is why we have people like Michael Jackson, like Aretha Franklin, like Nipsey Hussle. We hear all these stories where people didn't have stuff in order and we're shocked, we're surprised. What do you mean they didn't have a will? What do you mean they didn't have life insurance? So what you're getting ready to do is about to help some people because again, they're getting ready to see it's not just me, but if Neo is getting together, I also can get it together too. Because we don't want that shock factor. Like everybody's shocked, but we're not doing what we need to do. Yeah. So go ahead. All right. So tell me what the plan is.
Sure. So my goal is I'm 37 years old, right? So it's like we got 5 children. My wife is about to have our 5th baby. My goal is one more. You know what I mean? So
I'm praying for y'all. Being a really, but go ahead.
So, that's the plan. But let's just say 5 children.
Yeah.
My goal is to really see my great grandkids. That is my did you have your great grandma?
I did.
Oh, that's amazing. Great granddad?
I did.
So that's a unicorn. But I mean, I'm trying to make sure I didn't never see my great grandma. I never see my great granddad. My kids never met my grandma, and that really bothers me. But I say all that to say, my goal is that, all right, Destiny's 19. Let's say she have a baby in 5 years. I'm basing this on Ocean as well. Ocean's 5. Ocean has a baby also in 20 years.
Okay.
Destiny have a baby. Ocean have a baby. We'll just say in 20 years. Okay. I now have my first grandchild, 20 years from today. Then my goal is that baby has their first baby 25 years after that. Yeah. So that means I'm 37, so I'm 47, 57. So by 77, that means I will have a great grandchild?
Yes.
Right? At least a great grandchild. So if I live till 97, I might have a great
grandchild.
A great grandchild. But my idea is that, okay, if I got 5, 6 children and they all have, I'm trying to make sure every one of them is set, like every kid, we got the proper insurance on them. They got a proper plan in place for them, a proper protocol. If, again, I was talking to my man, he said, it's certain things set in place that triggers, like if they doing bad, they don't get this or something. If they, I want all of those things set up, and I want to be the granddad where they be like, granddad set us up, man. Like granddad left me. They said Quincy Jones left every kid like 80 or 90 million. Yeah. Now he different. He had his stuff set up.
Set up correctly.
I want to have them set up, but it's a plan you need to do that. I just know I want to be sitting at the crib. It's 50 people in this house because I can't name 10 family members right now. On my dad's side, I cannot name 10 Davises right now. If you say, name 10 Davises and call them, I can't.
Got it. Yeah.
So I'm like, well, I'm restarting that lineage, my goal anyhow. Like Sam Walton, I mean, I would love if I could be big like him. Like the work that he did 30 years ago, his kids are still on the top 20 wealthiest people in the world.
Yeah, yeah.
So my goal is to at least make sure my family is good. So I want to be at Thanksgiving, there's 50 of us, and everybody is not dysfunctional. We're in order. So I don't know what I need to do as far as insurance with that.
70% of wealth is lost by the second generation. 90% of wealth is lost by the third generation. And so when it comes to wealth, there are two phases of wealth that people focus on, but it's the third one that they don't do. That's the reason why they're not transferring their wealth. And so the first one that everybody focuses on is building wealth. We know how to make money. We're very good actually at making money.
Right.
The second phase that everybody focuses on is transferring it. Exactly what you just explained. I know how to make money. Now I want to transfer it and pass it on. But the phase that everybody skips is the sustaining part. How do I make sure that this lasts? Because you still have to live. So in this example, we just said you're 37 years old. We're planning for you to 97.
Yeah.
So that is, 60 years? So what you're at, the level that you're at right now, we need to sustain that for 60 years for any of what it is you want to do to be able to take place. That makes sense? So if you're at your highest earning potential right now, what is your sustainability plan? If you're at your highest business it's ever done, what is your sustainability plan? And without that sustainability plan, this is why most people have used to be stories. Because back in my day, I used to be. Because we only focused on building, we only focused on transferring, but nobody ever sat us down and said, okay, we have to sustain this. What does that look like? So that looks like diversification. That looks like focusing on some guaranteed income. That looks like transitioning from active income to passive income. It looks like reducing your tax burden. So when we're doing your wealth plan, and this is why in our community we talk about this, you have to first identify where are you in your journey. Am I in the building wealth phase? Because you're doing different activities. Am I in the sustaining wealth phase? That looks different. And then am I in the transferring of wealth phase? Once you get all three phases correct, that plan is a breeze. What we put in place for you, done. Knock it out. It's over with. But we cannot skip that second phase, and most people do. We just think about making money, leaving money. But what happens is because we don't plan for sustaining, all the assets we built, we have to now live off those assets. We have to liquidate those assets. So there's typically nothing left. And so that's where we get into like the whole retirement part, so forth, on how you can actually make this last over the next 60 years.
Yeah. How much time should you be spending on learning this game of wealth? Because you can't learn this in a podcast, and you got to spend maybe an hour a week, or like you got to work on this plan.
Yeah.
This is serious.
So we take our clients through the DREAMS process. Yeah. So DREAMS is an acronym. The D stands for define. So we help you define your goals to really understand what you're trying to accomplish. The R stands for research and education. So we want to make sure that we understand and that you understand everything that you need to know about it. So when we have a conversation, it can be conversational and you don't feel like I'm talking a bunch of finance jargon at you. The E stands for empower. And so that's where we give you a plan so that you know what you need to do. But a plan without action, which is the A, doesn't do anything. So we help you take action. The M stands for mobilize, because we understand that when somebody's trying to move in one direction and everybody in their circle is pulling them back the other way, they're less likely to achieve the goal. So we want to make sure that we involve your family, involve those people that you love and care about the most. And the S stands for sustain. This is a lifelong journey. Yeah. What you're doing today is not what you're going to be doing 5 years from now. It's not what you're going to be doing 10 years from now. So people are trying to do everything in one sitting, in one shot, and it doesn't work that way because you're always evolving. Your goals, your finances are always changing.
Yeah, that's good. I love that. Yeah, that's powerful. I mean, just to have a plan. I want to talk, I'm going to be honest, like, we probably got to do a part 2. Let me know in the comments if y'all want, just comment part 2, because I feel like we can't uncover everything in 60 minutes, right? Yeah. I want you to talk about probate. Like I was on the call, you were talking about, here are the 5 things everybody need. I want to talk about probate. Like, what is it? Yeah. Because I think you might have said Michael Jackson may still be in probate.
Still in probate court.
How long is probate?
So probate is a part of our judicial system that helps to make sure that debt collectors can get paid. So in our country, debt collectors are the first people that are entitled to payment. And so that's what our probate court does. And so Michael Jackson, unfortunately, he had everything set up correctly, but his assets were never funded inside of the trust. Wow. So therefore, all of his assets are still going through the probate process. And there are 4 documents.
So let's say that again, though, just so he had things set up, but you got to fund the trust. What do you mean? Do that mean take the property and dropping it. Like, what do you mean? Because that's what I think about when you talk about funding
the
it.
trust.
How do you fund it?
So
Put
when I
the
say
LLC in the trust, like,
so when I say fund the trust, that means that you legally have to transfer ownership of your assets for the trust to be the owner of it. So if you own a property, you actually have to go down to your county's clerk office and change that deed over. You have to go to the bank and actually change the name on that bank account to be the name of your trust. So you have to legally transfer ownership. So if you have a trust and you have not legally transferred the ownership of anything, then you truly have nothing.
wow.
You know, it's not until it's funded that it becomes valid. And so in his case, his assets were not placed in the trust, even though he had the documentation set up. So all of those assets still pass through probate. And so every time, and you can literally go out there and Google it, right? In the Los Angeles County, you can Google it and see. But every time his mom wants to get more money or change something, they have to go back through probate court. And so you could, for an everyday person, probate court can cost your family $50,000.
Wow.
Somebody with the estate of Michael Jackson is costing them probably millions of dollars, and his estate earns $50 million every single year. He has the highest
He's
earning.
still making $50 million a year?
A year after death. He has the highest earning estate after death. And so now imagine all of that getting eaten up by fees, attorneys, probate costs.
Everybody got their hands in the cookie jar.
Everybody got their hands in the cookie jar. Like, if you want to do anything, like, you know, there was a request, like, I want to have more money, or I want the kids to have more money. Everything has to go through the court system. So you want to avoid that. And the way that you can avoid that for your family is by having these 4 documents set up. And I believe 95% of people need to have these 4 documents. If you have income, if you own property, or if you have minor children, you need to make sure that you have power of attorneys. So that's your financial power of attorney. If something happens to you, who can continue the affairs? Who can access the accounts? I had a case recently where somebody's loved one passed away. They didn't know where anything was. They couldn't get access to no bank account. So if there was money, they couldn't even get into the person's apartment. Wow. So you need to have a financial power of attorney. You need to have advanced healthcare directives. That says if I'm incapacitated, something happened to me medically where I can't speak for myself, who gets to make those decisions? Do you want to be on life support? Do you want to have your organs donated? You know, when does somebody take you off of life support or different things of that nature? What type of medicine do you want? How do you want your final expenses to be carried out? If you don't tell us, how do we know? Yeah. You need to make sure you have a will in place. People say, do I need a will or a trust? It's both. Capital B. You need both of them. Capital B. You ever see like both? Capital
both.
B.
Yeah, both of them.
You need both of them. Yeah. So the will's job says who gets what. A will is also the only place where you can grant financial guardianship of your children. And so this is what Nipsey Hussle didn't have.
Only place you could grant
financial guardianship of your children. That means
somebody gonna take over my children?
So if you leave, so there's 3 types of guardianship. There's legal guardianship, there's physical guardianship, and then there's financial guardianship. Legal, who can make decisions. Physical, where your children live. Financial, who can control their assets. So if you're leaving assets to them, the only place you can assign that guardianship is in a will. So Nipsey Hussle didn't have a will, but he left his estate to his daughter. So this is why you have her mom and his siblings in court fighting over who gets guardianship. Like, I can't imagine being a mom fighting for guardianship of my child. Wow. But because he didn't have that, now whoever controls that guardianship controls the money. Wow. So you need to have that in place. And the final thing is you need to have a trust. And the great thing about how a will and trust work together is that anything that you didn't get a chance to place in your trust, the will catch it and then put it back into the trust for you. So maybe let's say you have a grandchild that you didn't name yet. The will catch it, put it back into the trust for you. Wow. So you need those 4 documents to make sure that what you're building can actually last for generations.
That's good. You said something the other day, I heard you mention, I just want to clarify. Something about when they calling for organs. I didn't really understand. Tell me about that. What that mean?
So there's an organization called the Gift of Life. Yeah. And so there was a case that I had recently where somebody's loved one passed away and they didn't know that their loved one had passed away. And so they got a phone call from the Gift of Life that said, hey, can we have the organs of this person? That's how they found out their loved one passed away. Wow. And so because there was no advanced health directives in place, there's nobody that we say, okay, who can make those decisions? What do we have? But if you don't tell people what you want, you got organizations, people trying to make decisions for you. That's a horrible way to find out that your loved one passed away when somebody's asking, can they have a liver? Can they have a heart? And you like, what's going on? So it's so important that we make these decisions. And when you don't, I know we say things like, my mom know what to do. My husband know what to do. They know what to do. They don't. People don't, because your interpretation of what you want, of what you think should happen, is different than my interpretation.
It's like having the SOP for your life and family. Almost.
You do. You need to, because now when you don't have that, you leave it up to the courts. Now the courts got to decide. You think the courts care anything about who your grandma loved more, or who she liked more, or who she didn't like? They're going to divide that thing right down the middle. Yeah. Now people ending up with your children who you didn't plan to. Your money is going places you didn't want it to go, and you have no say. You up in heaven looking down like, look at this. Yeah. And again, instead of leaving generational wealth, which so many people desire to do, this is how we leave our families, with generational trauma. If you can ask anybody who ever had to take care of the affairs of a loved one who passed away, 99% of the time, it's a horror story. Yeah. It's a horror story, 99% of the time.
But we could fix it.
But we can change that. And the only thing you need is those 4 documents. And it doesn't take much to do it. You don't need much. You just have to actually take action and get started.
That's good. That's powerful. Listen, there's a lot to uncover and unwrap. Yeah. I think we want to come back for a part 2. I'm going to make the executive decision because I need to learn more. It's like,
yes,
I got to go watch this over again and digest it again. I think I'm so excited that I believe people are going to use this information to really help them get a bit further in the wealth game, right? Where we don't got to keep, I'm tired of starting over, man.
Yeah.
You know what I mean? Like, I'm tired. I'm tired. You know what I'm saying?
We need to give our children something new to struggle with. Yeah. Like, let's not let the struggle be, how do I pay for college? How do I buy my first home? How do I get my first car? How do I start a business? Like, there's also a struggle from going from a millionaire to a billionaire. What if that can be their struggle that they start with? What if the struggle is how we take the company from being local to being national? How do we take it from being national to being global? Like, let's start giving our children new things to struggle with, but let's stop repeating the same struggles. That's it.
Powerful. So let everybody know how they can tap in with you, Siedah.
So definitely, you can connect with us. Follow us on Instagram at _Siedah Garrett. Also connect with us on Facebook and LinkedIn. And then if it makes sense for you, you want to learn more of this information, tap into our community, the Wealth Multiplier community as well. We have tons of individuals in there learning how to build wealth, how to sustain their wealth, and how to transfer their wealth. And we want you to be a part of that.
Listen, guys, with that being said, we're going to wrap it up. Make sure you guys follow Siedah. Schedule a call to talk to her and her team to help you get your stuff right. Like, look, we scheduling it together. Like, I'm not talking, I'm talking with you, not at you, right? So I'm happy to be on this journey of building wealth the right way. So we'll see you on the next show.